Hey traders, Raghee here, and probably one of the more common questions that I get is, Ragh, how can I buy this market? And on the flip side of that is, how can I sell it? And I think more so than, saying, hey, wait for a pullback or wait for the bottom end of the range, which is very much something that you guys know is my focus. It's really maybe even prioritizing which markets we want to buy versus those markets that we're open to selling. So the market that I say market, that I really want to focus on the long side of are pullbacks in the NASDAQ. And I would throw the XLY and the XLC in also, because those are two of the strong sectors within the NAS that I like pullbacks within. So NQ is a perfectly fine contract to look for buys in. As long as tech is leading the way, as long as consumer discretionary remains strong and the communication sector, NQ is the way to go. Now, I can say, yes, the ES is going to go along for good measure, but I'd rather you focus on the NQ, XLC, and XLY and just leave the ES alone. To the short side, well, interestingly enough, we're kind of getting close to the upper end of the range. Now, if I were looking to short something, again, it's going to be as the market's trading up near the top of the range. Now, how do I define the range? It's going to be a combination of a few things, but oftentimes it's going to be the value area high for the month or the value area high for the year, whichever or both that we have proximity to. It could be a Darvis level. It could be our V-score becoming, I won't call this overbought, but testing resistance that we've traded at before. So this is, RTY here nearing or in the lower side, the lower end of an overbought resistance range. YM, not that different. Moving up higher towards resistance. And again, it could be the resistance of the Darvis. It could be the resistance of of the value area high for the month. It could be heading up towards resistance that we've been rejected from before in the V-score, as you can see right there. So again, the trading for me, the timing that's ideal for entries is going to be buying as low as I can. That could be a retracement, that could be oversold. And that's really the difference between trading a trending market and chop. And in the case of a short, it's going to be trading a retracement to the upside in a downtrend, or trading resistance levels in more of a consolidation or chop. Now, this is still a little bit of chop. If this were consolidation, more narrow, I'd see more blue, or I'd see this sideways market narrower and just absolutely dominated by blue grab candles. Now, we could say it's pretty close to consolidation, but it's still wide enough where I would still focus on the upper end of the range for the short, okay? And that's where we are right now. And again, those are two of the most common questions that I get. Ragh, how do I trade to the short side? How do I trade to the long side in the index, in the indices, in the equities? And it's going to come back to, well, which ones are you prioritizing to the long and which ones are you prioritizing to the short side? And then waiting for their respective, sort of high and lows of the range to put you in the best spot to get long or short from. And that's it. Now, if you can take this message and apply it to everything you do as a trend follower or as a swing trader, whatever the verbiage that you use, I think it's going to put you way ahead of traders who are trading sideways markets and who are trading trends by using momentum. There's a time and place for momentum, but sideways chop and trends are not one of them, okay? All right, gang, so that's today's free video. Think about the timing. That alone should be something that could create a real shift, a positive shift in your trading. Hope it helps, and I'll see you in the next update.